Lemonade Investor Day 2 just happened. I want to give you guys some quick thoughts, especially for the people that weren't there, couldn't make it, didn't get an invite. Give me some of my thoughts for the day, some of my takeaways. So let's jump into it. It was an awesome day. Just really, really good to meet so many other people passionate about Lemonade, passionate about investing, and really excited for the future of this company. Also, so good. I had a lot more time, I think this time, to chat with a lot more of Lemonade's management. Time right after the presentation, instead of a formal Q&A, which is very informal Q&A, and chance to talk with many of the management, as well as we had a retail investor hangout later in the evening and a chance to mingle and chat with lots of them as well. So that was a big highlight for me. Just meeting more of the management and talking, picking their brains a little bit about the company and getting to know them and sort of what type of people they are, what quality of people they are, and so many just awesome people in this company. I think 2 years ago, I was looking back at my Investor Day notes after the event 2 years ago. I felt like 2 years ago, we were really at a place where the question was, are they going to make it as a company? Are they even going to succeed as a company, or will they fail? And I think the picture is much clearer now that they're going to succeed, at least for most people, especially anyone who's bullish on the company. Of course, they think they're going to succeed now. I think for some bears now that are still out there think, oh, they're not going to make it. There's no way they're going to turn profitable. And that's largely due to bears looking at the quarter by quarter financials, saying, hey, look how bad these are on this quarterly basis or on a yearly basis. But the financials are bad in large part because they're ramping up their growth spend so aggressively. But aside from those few bears that don't seem to understand that, I think a lot of people think the picture now is not, are they going to survive, but the downside is really diminished, the sort of probability of a downside scenario. But in my mind, it's more of what is the possible upside? Like, even if their home product maybe never differentiates itself, even if their car product is just, again, very average and never really differentiates itself, for whatever reason, say, I don't think that's going to happen, especially with car, but just say that is the case. I still, even in that scenario, I think the business they've built, the customer base they've built, the cross-sell opportunities they have there, and also the sort of potential funnel of acquiring customers through renters and pet, and then funneling them up to home and car, you still could have a very successful company, successful investment. You can plug in and make some assumptions and still say, hey, this company could still, as an investment, return whatever amount over the next 5 years time, 10 years time. But I think that's much more likely it's a higher upside sort of scenario. And it's more, we could really debate what that will be, but it's exciting for me because I just think the downside is so diminished if you look at the numbers carefully and think about the path that they're on. Again, nothing in my videos is financial advice. You can each do your own due diligence and make your own decisions yourself. But for me, I think, the probability of the downsides is quite a bit lower. The probability of an okay return is there, but not even that probable. I think it's more likely, the more probable kind of outcome is we get some really fantastic returns over the next 5 years, 10 years. And conceivably, the way they're building a company now, you could think, hey, maybe in the next 8-9 years they scale to 10 billion, but then why not in the next 10 years after that they're scaling to 50 billion or 100 billion of premium, or the valuation of the company, maybe if their margins are better than a typical insurer, maybe the sky's the limit. I'm trying to say is that even the sort of wild, might sound outlandish sort of upside scenarios where you're like, Yeah, in fast forward a couple decades, this company's worth $100 billion or several $100 billion. I don't. Those sound outlandish, and you might a lot of people would think, hey, the probability of that happening is very low just because it's such a big number relative to the number it is now. Say, hey, it's worth $200 billion, and now it's worth $2 billion. So they're gonna say, oh, the chances, how often does that happen? Not very often. So probably not likely. But if you think about the company from a first principles perspective and how they've built it and all the just incredible ways they've built it for scale and to underwrite more effectively, in my head, I'm like those high end sort of wildish, outlandish scenarios are much more likely. Again, not financial advice, but that's my thought. And then what's great is that I just don't see the downside as a strong case. So that's in my mind. That's why I think the stocks, fair value would be significantly higher than even it is now at $40 a share. Maybe it's like, somewhere I've been saying maybe between $80 and $120 a share. I could see the arguments for it to be even worth more than that potentially. But I just think it's still so undervalued. I plan to keep buying shares and accumulating shares because I think it's going to be somewhere between an okay investment to a good investment to a great investment to like a fantastic sort of investment return over the next, looking out 5-10 years as we hold this company. Shifting gears a little bit, I want to point out just a few other random highlights or things that stood out to me from the day. One was that they plan to spend 40% more on customer acquisition in 2025. 40% more than this year. And this year, the number I did have was like 110 million they were going to spend. And I believe in Q3 they were saying, I have to kind of review those notes, but I think they were saying it was going to be more like 120 million spent on customer acquisition for 2024. So 40% on top of that, it's like 168 million, somewhere in that range of CAC spend for 2025, which is they really plan to start pushing the pedal to the metal and growing aggressively. But I don't remember. I think this was in the presentation, but I was also talking to Matt Smith later in the day, and he was mentioning that he was talking with some of the management, and they were saying even with this accelerated growth, they plan to keep. They believe that the LTV to CAC ratio for these customers they're acquiring will still be above 3. And I think the way this makes sense is that because car is going to start to roll out and sort of hold its own as its own product, that's going to be contributing to the LTV side of the equation. And I mean, I think that's partly how they'll be able to keep aggressively expanding the amount of their spending on growth spend, but keep that LTV to CAC ratio, at a healthy 3 level, or, probably even higher than that. Another thing that stood out to me is that telematics is a really big deal. And Lemonade having their own sort of proprietary interpretation of the data. See, my understanding is that these other insurers might use maybe say they use that telematics, kind of have a telematics program, but then they'll have like a third party off the shelf other product or company they'll use, they'll feed their telematics data into that product, that other third party system, and then from there that will create sort of like your own underwriting risk score per customer from that data. But of course, these other companies, then they're limited. They don't have to do the work of building that system, but then they're limited by basically the constraints of that system. Maybe that system has some ways it could be better, but they can't improve it because they don't have control over it. So Lemonade says they use that system, to interpret their data, so they know what that was like. They probably still see or could use it and see the sort of how it's showing the the breakdown of customer risks and their profiles across customers. But then they built their own system, and it's proving to be significantly better at showing the risk between customers. So, I mean, it's so obvious. Like, if you look at drivers, think about people there's certain people that are very, very conscientious, very, very safe people, always like, they do every maintenance exactly on time, check their, do a walkabout of their vehicle every time they drive to make sure that everything is safe and running correctly, and drive very, very always at the speed limit. And then there's other people that are like reckless and speeding and cutting people off. It's very obvious, there's certain people that are going to be much more likely to have an accident versus, others that won't. And then on top of that, where you're driving, when you're driving, all those different factors, could play into it. So the telematics, it just makes perfect sense. This could be a huge deal in giving better rates to the very best customers, and then leaving the very worst customers. You don't even want these customers aside, so they don't even sign up for your insurances. So telematics, to me, it just seems so obvious. This is a huge deal. And then if you look at different, one of the slides they had in the presentation was that if you have a 10% change in the cost of your car insurance, that could have it said 50 to 100%. Talking with Shai later, he said, yeah, it's over 100% improvement in the conversion rate. So car is a big deal. The telematics is a big deal. Car is obviously in many ways a sort of commoditized product, like a lot of insurance products are. You just offer car insurance based on a number of basic proxies, and there's not much way to differentiate anyone. So hey, if you can sell it for 10% less, well, yeah, people are going to sign up because there's no difference in the product. But for Lemonade, there really could be a difference in the product if their telematics is sort of best in class at differentiating risk profiles. It's going to be a huge deal at attracting the right customers. And they said 700,000 customers were on the wait list. And they also had a slide, I think, of showing this sort of breakdown to get to 10 billion. And it was like maybe 4 billion, maybe a little bit less, but around that $4 billion range in car. And, that's going to be probably over the next, I assume, not 8, 9, 10 years time. So you're talking about adding a pretty small amount of car right now, going to maybe 4 billion in car. When you consider the whole book of business right now is less than $1 billion. Oh, it's massive, sort of the impact a car could have on things, will have on things in the coming years. And then, the critique is people are going to say, well, and they, can sort of hear them now. They'll say, oh, but everybody has telematics, like Geico has telematics, other people have telematics. But I really think like saying that another insurer, a legacy insurer, has a telematics program is kind of like saying, is that a legacy car, my Toyota Prius can do full self-driving because it can stay in its own lane. I mean, I've heard examples like that where people have driven a Tesla with full self-driving and then tried to explain it to someone else, like, yeah, my Tesla can just drive itself. And they're like, oh yeah, my Toyota does that too. And it's like, yeah, it like barely keeps itself in the center of a lane on a highway where the lane lines are like perfectly painted. Like, it's not even in the same universe at all. And I think that in a way that, that's sort of an analogy of like, oh yeah, my car Geico does telematics. I have it with them, but it's my guess is that they will struggle with really creating a sophisticated, really seamless product that actually works and actually delivers really underwriting value to them. Even this is super anecdotal, but I was talking with someone at the retail hangout last night, the night before Investor Day, and he's from the New York area here, and he has Geico car insurance, and he says he's showing me on the app and telling me how he tries to sign up for the telematics with it, but it's such a joke. Like it's super, super buggy, and it doesn't even, he tries to connect it again to telematics so it can track, his driving through his phone, and it's really hasn't tracked correctly or much of anything at all. Like it really, really, really struggles. So these other companies that, this is not in their wheelhouse whatsoever to create a sort of seamless digital product like Lemonade has made. So I just don't see it happening. The evidence in my mind is not there right now, and I really don't think it's going to happen, even if they had unlimited funds to do it, because they don't have the leadership, they don't have the talent in house. I just don't see that ever happening for especially legacy companies. One more thing I just wanted to touch on and talk about. I think my favorite part of the presentation, and almost everyone I talked to at the event, other retail investors, just asking them what did they enjoy the most, was Dina's part of the presentation where she did sort of a real time example, looking at tickets, responding to tickets, showing how the AI would respond, showing how they can improve it or give it feedback, or flag responses that might not be as good. This was really, really cool to see sort of the behind the scenes magic. I feel like they've mentioned, I've heard Shy say, he said to me before, like, oh, there's just so much magic that happens behind the scenes, but we just, we haven't been able to show you guys. And so this was a little glimpse of it. Shai said to some of us after, he said, this is the tip of the iceberg. And then he said, actually, this is like the snowflake on the tip of the iceberg of really, that's all we showed you guys here today. But it was still really, really cool and exciting to see such a clear, concrete example of how they can use AI to make things so efficient. And I realized later in the day, this evening, that we didn't really hear about, as far as I remember, we didn't hear L2 at all in the presentation. But I know this is something that Shai's kind of tagged or called L2, where they're doing a bit of a major rewrite of a lot of the structure of the company that should be able to, I believe it's especially around like product development, product implementation, product testing, all of the above, all elements that would go into making, releasing, testing, iterating on a product, and making them much less code heavy, almost not code at all, and much, much, much easier to design, implement, and release to market. So we didn't really hear anything about that. I'm thinking probably in some future letters we probably will. Maybe we'll wait till the next investor day, maybe in a couple of years. But that was interesting. I realized didn't hear anything about that. So yeah, it was a really, really great day, great time here in New York. So awesome to meet so many of you guys, talk with Lemonade Management. I will be definitely, as I have time here, digging through the Q3, some of the information we got from the Q3 letter, and of course the presentation here today. And then we'll be updating my models and, of course, making some more videos. So thank you so much for watching. Remember, it's in the bag.